Hey everyone, welcome back to Corporate Decoder, the place where we crack open the complex world of business and finance, one filing at a time. And let me tell you, our subject today, Pros Holdings Incorporated, seems to be dealing with a little hiccup in their journey towards becoming part of a bigger picture. So what exactly is this filing all about? Well, it is an 8K report, which is like a company's public diary for important unexpected events. Think of it as a news flash from the company to shareholders and the public. Today's big news is that Pros Holdings Incorporated is addressing some recent lawsuits that popped up related to their planned merger. Now, when a company announces a big deal like a merger, it is not uncommon for shareholders to get vocal. In this case, a couple of lawsuits have been filed against the company and its board of directors. The main claim, that the company's official statements about the merger didn't quite tell the whole story or missed some important details. There were also a bunch of demand letters sent before the lawsuits, which is kind of like a preemptive strike from shareholders' lawyers saying, hey, you need to tell us more. Despite all this buzz, Pros Holdings Incorporated is standing firm. They believe their original statements were just fine and didn't strictly need any changes. However, in the grand scheme of things, these kinds of legal squabbles can be a real headache. They can cause delays, cost a lot of money, and generally create a ton of uncertainty, especially when you are trying to get a major deal like a merger finalized. So to keep things moving smoothly and to avoid all that drama, the company has decided to add some extra information to their original announcement. This is a bit like adding a postscript to a letter just to make sure everyone's crystal clear on a certain point. Specifically, they're clarifying that the bid from Thoma Bravo, the company looking to acquire Pros, did not involve any negotiations or conditions about management staying on after the merger. This kind of detail, while seemingly small, can be crucial for shareholders deciding whether to approve a deal. Now, when a company is being bought or sold, you often see financial advisors providing their opinions on the value of the company. This involves a lot of complex number crunching, and Pros is supplementing its disclosures on these analyses. For instance, when they looked at their cash and cash equivalents, they broke down figures like the approximately $187 million they had as of June 2025, noting that this included about $8 million in investments in private companies and a venture fund. This gives you a more granular look at their liquid assets beyond just standard cash. They also mentioned the implied net present value of estimated future tax savings from their net operating losses, which is a way of saying they're accounting for the fact that they might not have to pay as much in taxes in the future thanks to past losses. This is a common financial planning tool, and when talking about the company's debt, specifically their convertible senior notes due in 2027 and 2030, they've provided a total figure of $315 million as of June 2025. This is important for understanding the company's overall financial obligations. Then we get to the comparison charts. These are where the company looks at similar businesses both in the subscription software and mature software spaces, even travel software companies, to see how they're valued. This helps them benchmark their own potential worth. For example, they've listed companies like Blackline Incorporated trading at multiples of revenue and free cash flow, with enterprise values reaching into the billions. Then there are giants like Salesforce Incorporated in the mature software category, with massive enterprise values. The point here is to see what the market is willing to pay for companies like Pros. Looking at the data, you can see a range. For instance, Workday Incorporated is showing a 2026 estimated revenue multiple of 5.6 times and a free cash flow multiple of over 20 times. Then you have Salesforce with similar revenue multiples, but an astronomical enterprise value in the hundreds of billions. It paints a picture of how the market values different types of software companies, from fast growing to established giants. This next section is probably the most interesting for understanding the deal's context. It's the selected transactions analysis, which means they're looking at actual past acquisitions of similar companies to see what prices were paid. The table is packed with data from deals like Verint Systems Incorporated being acquired by Thoma Bravo, LP for a revenue multiple of 2.0 times and an EBITDA multiple of 7.2 times. We see other notable deals like Dayforce Inc., acquired for a much higher 6.0x revenue multiple. The actual enterprise values in these past deals vary widely, from around $1.3 billion for companies like Model N Incorporated, to massive deals like VMware, Incorporated for $70 billion. This analysis really tries to pin down what a fair price might be for Pros by looking at what has actually happened in the real world of mergers and acquisitions. What this shows is that their financial advisor, Catalyst Partners, used these past deals to come up with a range for what Pros is worth. They looked at the revenue multiples from those past transactions, and based on their professional judgment, they chose a range of 2.0 to 5.5 times revenue. They then applied this range to Pros' projected revenue for the next 12 months, estimating it to be around $379 million. This is how they arrive at a valuation range, looking at similar deals and applying that logic to the company's future earnings potential. And now, let's dive into what Pros itself is projecting for its future. This table, unaudited prospective financial information, gives us a glimpse into their internal forecasts. They're showing revenue growth from an estimated $362 million in 2025, climbing all the way up to over $1 billion by 2034. That is a pretty ambitious growth trajectory. They're predicting consistent year-over-year revenue increases, which is always a good sign. What is also interesting is their adjusted EBITDA, which is a measure of profitability before certain expenses like interest, taxes, and depreciation. This figure is projected to grow significantly from $44 million in 2025 to $219 million by 2034. This suggests they expect profits to grow faster than revenue, which indicates improving efficiency. And finally, take a look at levered free cash flow. This is the cash a company has left over after paying its operating expenses and debt obligations. It's projected to grow from $44 million in 2025 to a healthy $256 million by 2034. This is a key indicator of financial health and the company's ability to generate cash for future investments or shareholder returns. Overall, Pros Holdings Incorporated is going through a typical merger process, but with a bit of shareholder pushback, they're supplementing their disclosures to address concerns and keep the deal on track. The financial projections show a company expecting significant growth in revenue, profitability, and free cash flow over the next decade. While the lawsuits are a temporary distraction, the underlying financial story appears to be one of solid anticipated growth, which is what investors will ultimately be focused on. Now, looking at these numbers more broadly, Pros Holdings seems to be charting a course for considerable expansion. Their projections, if they hold true, suggest a company that anticipates not just growing its top line, but also becoming more efficient and generating substantial free cash flow. The fact that they are willing to add detail to their disclosures, even when they believe the original statements were sufficient, shows a pragmatic approach to navigating the complexities of mergers and securing shareholder confidence. The inclusion of detailed analyses based on comparable public companies and past transactions in the software sector provides a solid framework for understanding the valuation discussions. The key risks as outlined are fairly standard for any merger-related filing, centering on the timely completion of the deal and potential disruptions. Alright, that is our breakdown of Pros Holdings Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the added disclosures are enough to calm shareholder concerns? Drop your thoughts in the comments below. If this analysis was valuable to you, hitting that like button really helps us out, and be sure to subscribe for more deep dives into the corporate world. And don't forget to check out our Discord community linked in the description for more discussions and direct access to our team. Thanks for watching. See you next time.